Okay, it's Tuesday the 29th of November. We're just at 10 past 1 and we are on the Ftse 100. So as always with these live trades now, if you want to see the overall analysis on this market from this morning, just watch the review video of the same date. Okay, so basically this morning what I was looking for was a reaction from this zone up here for a sell position. You can see the reaction came at 7:20 this morning, which for me was just a little bit too early, so I missed this move down. If you watch any of the Sunday analysis videos, you will know that for the last couple of weeks, we've been looking at a triangle on the daily time frame of this market. The market has then broken the triangle to the downside, which is a bearish sign for the Ftse. What I was looking for this morning was the market to attempt to push back up into what would then be sloping resistance up toward here for the sell position. The market then came down, bounced off of the zone. It has then crashed through the zone, reached the 6750 level, which is a support level, and it has then bounced back up once again. Now, with the market being bearish, having missed this move, first of all, I was not interested in looking for long positions here. You can see all these candles spiking around, long tails. I was expecting this to happen because we have been within this triangle for so long that if we broke it, I was expecting at least an attempt at a downward move. So the market bounced and then it fell through. So the market has done what? It has made a high, a lower high, and then a lower low. This is your first indication that potentially this market is looking to downtrend. The market then pushed back up. Well, first of all, it pushed back up to this level. I ignored this level, mainly because we can see the main reactions here at the lows are up here. This just reaches it before it begins to sell off. I wanted to see the market make a stronger attempt to push up into these levels before I seen the reaction. It did that right here. It then came down, gave an engulfing candle at 12:45, which did not trigger me in. However, then at 12:55 we got a pin bar also, right here, and it has triggered me in below the low of this candle. Let me just put this back in quickly. So we're looking at the potential downtrending move in a bearish market that has confirmed this bearish sentiment this morning. Now, where am I watching for this trade? Well, let's have a look. Let me just clean this up a little bit. Well, first of all, I want to watch down here and just see how the market reacts. The reason for that is on the pullback, it stalled here, and then it came up and came back down and retested this level before it pushed off again. So potentially we will see some support at this level. After that, it's down toward these levels, with the target for the trade being anywhere within this rectangle right here. Now, for the trade, what are we looking at? Well, we have, let's just put this in, our stop just sitting right here. So overall, we're risking just under 11 points, and we're looking to make round about the same. So looking for a 1-to-1 risk reward on this trade. As always, the way I trade, it's not just blindly looking for your target when you're in a trade. So you get a lot of people who enter trades, they look for 1-to-1, 1-to-2, 1-to-3, whatever it is, and they're in that trade until it reaches that level or moves against them and stops them out. That kind of trading is understandable on higher time frames, but for me on lower time frames, it just doesn't make any sense because you can sit and you can manage your trade. So if it starts to look like the trade is incorrect, and I have the opportunity to get out of that at break even or with a very small profit, I'll do that rather than suffer a 1% loss. But that's what I'm looking for, guys. I'm looking for the market to come down into these levels as the target for the trade with a 1-to-1 risk reward, and those are the main reasons for the trade. You can also see the overall analysis on the review video as mentioned from the 29th of November. Okay, so what I will do is I'll pause the video and I'll turn it back on when I'm basically managing the trade, making any decisions, or when there's something to talk you through. So the market has popped up at this 130 candle. It hasn't reached the stop at 773.9. So the trade is still valid. I'm still watching it. We basically got down to these levels at 758. You can see the market's just made a retrace. It's popped up, but it is now coming back down once again. So we'll see how the trade goes. The areas down here still remain valid as a management point and as the target. Okay, so the market is coming down. It's almost at target. There we go. So the trade closed just better than 1-to-1 risk reward. Now, looking at this trade, a couple of things to go over which you may find useful. So the first thing is it's important to have and follow a trading plan. So I entered after this candle right here. The market came down, it then reversed, and it has moved up against me. It came relatively close to the stop, it then came back down again, and then when it got to here, we've seen a strong bullish reaction. Now my trading plan tells me I'm not interested in the trade, making adjustments until I see it reach my management point. So I didn't do anything. One of the most important things in trading is your trading plan. A lot of traders, especially beginner traders, they come to trading, they think that they get a successful trading plan and then all of a sudden that's it. They're going to be successful traders. Their trading plan is going to turn them into millionaires. The vast majority of what you have to learn as a trader is not the trading plan itself. It's to follow the trading plan. It's your discipline when you're trading. So there's no point in having a trading plan that, let's say, it makes you on average 70% in a year. But then the decisions that you're making within those trades, you're cutting the trades early and you're turning it into a break-even or potentially even a losing trading system. Now, it's not the trading system that's losing you the money and causing you to do that. It's your ability to follow that trading plan. It's such a huge part of trading. I can't stress that enough. You really need to learn to abide by your trading plan. If it's a successful trading plan, you know what I mean. If your trading plan is useless, there's no point in following the trading plan because it's not going to work anyway. But what I see a lot is when you get this move up, perhaps it's coming towards your stop, a lot of people will jump out early and then they'll enter into a long position because, oh, well, the market's moving up so strongly here. I'm obviously on the wrong side of the market, so I'm just going to reverse. Or they hold on after this one, but the market moves down and then it comes back up here and you go from being plus 4.5 points to -1, -2 points. And they start to panic and they exit, or they exit at break even. If it's not part of your trading plan and you know your trading plan works, that's where your issues are coming from. That's why it's a great idea to have a trading diary. You put down what you did in every trade, what you did incorrectly. It allows you to have something to reference back to so that you can fix the mistakes that you're making. You can address them and you can correct them. Okay, guys, so that was the trade. Another just better than 1-to-1 risk reward. I've actually had quite a good run of trade recently. I think I'm on about 8 trades now which have reached target. And I've not had a loss in that time. So, I'm expecting a loss to come relatively soon. It's all part of trading. But it's always nice when you get your run of winners. Okay, guys, as always, I hope that was helpful. I'm James Orr, and thank you.